The bulls or the bears? Who will prevail when it comes to Nvidia? Let's dive in. Here to talk about these two different viewpoints on the biggest stock in the market right now is MarketBeat analyst Chris Markoch. Chris, Nvidia has been the hot topic for years now. Recently, there's been a lot of movement on this stock. Let's talk about what we're seeing right now.
So right now, Nvidia jumped about 4% yesterday. It had been Tuesday, the 24th, and that actually led the S&P 500 higher. It had started the day kind of weak, and then because of Nvidia kind of led the way. And the reason why it jumped 4% yesterday was because Jensen Huang, the CEO, announced that he was done with this round of selling that had taken place that he had been doing since the company's earnings report in late August. I put this in my article as as kind of a bull bear counterpoint. This is kind of one of the weakest reasons I think that people have to sell the stock, but I understand the thinking. Retail investors sometimes get nervous when they see a CEO or another corporate insider selling a lot of stock, but in general, these are nothing burgers. Most of these events are orchestrated well in advance. They're called these Rule 1065B1 trading plans, and they have to file these with the SEC usually months in advance of when they actually sell. So the SEC is well informed about the fact that these sales are going to take place. It's just a matter of when they take place, and the CEO or the insider doesn't really know what the stock price is going to be on that date. So a lot of people thinking that Jensen Huang was selling because he knew something bad was going to happen to Nvidia. That's really not the case here. Nevertheless, on the news that he wasn't selling any more stock, the stock did start to go up.
So it looks like the Bears
Yeah.
and the Bulls had a little bit of win on that one, on that point.
Yeah.
Moving on to another point that you brought up in your article, the Bears are arguing this Blackwell delay
Yeah.
as a reason to not go for this stock. Give us both sides of the argument on Blackwell.
Well, this is another one that I would say among the arguments that I would have, this one's kind of not very strong. The reasoning that some investors have is that you have companies like Meta and Microsoft who have already expressed an interest in getting their hands on other high performance AI chips. They don't want to be just beholden to Nvidia. That's all well and good. And certainly there are some competitors along the way, Advanced Micro Devices being the most prominent one. But none of these competitors at this particular moment are ready to capture market share at scale. And keep in mind, Nvidia has 85% of the market. And so, I mean, it's going to be really, really hard for these other companies to start chipping away at that market share unless they have AI chips that they can start delivering at scale before Blackwell comes out. And Blackwell is going to be available by the end of this year or early next year, according to Nvidia.
Which is not that far off at this
Right,
point.
exactly.
Another point argument that you pointed out in your article is talking about kind of what's going on in the economy. We know we
Right.
just saw these rate cuts. It's all anyone is talking about right now. What's the argument from the Bears and the Bulls on how those rate cuts might impact Nvidia stock?
Right. This actually, to me, is the strongest of the arguments. If you were going to make a bearish case, there's a lot of contradictory signals in the market right now. And you've seen this with chip stocks over the last couple of months. They go up, they go down. If there's fears of a recession, they go down. If there's thinking that there's going to be a soft landing, they go up. The concern is that if the economy goes into a recession, that the companies that need NVIDIA's chips are going to slow down on AI spending. In my article, I cited a study from Payments that said companies that spent between 1 million and 5 million said that there's really not going to be any change in their spending. Now, all of that can change, but this would be the one concern that I would have if I was an NVIDIA shareholder would be, would companies be starting to pull back on that AI spend if the economy goes into a broader recession? It's too early to tell. And to be honest, we just don't really know right now.
Another argument you pointed out for or against Nvidia is the valuation of this company. Let's talk
Yeah.
about what the bears and bulls have to say about that.
So this is one that you hear about almost every day. And that's just that Nvidia is a very expensive stock. And by expensive, for the retail investors that may not quite understand what I'm saying here, I'm not necessarily talking about the stock price. They've split their stock. It's not expensive necessarily from that measure, the stock price, but it's expensive from valuations like price to earnings. The multiple was, I think, around 23 times forward PE when I wrote the article. There's other back of the envelope metrics that investors use: price to sales, PEG, and by almost any measure, Nvidia is an expensive stock to buy. You're paying a premium to buy the company's future earnings, which many investors feel are already priced into the stock. The more compelling argument, I guess I would say, there is people look at Nvidia's market cap, which was 2.84 trillion when I wrote the article, and that's an amount that's equal to what the entire cloud computing and generative AI market will be worth around 2030. So it's expressing the fact that, again, this is an expensive stock. Investors are paying a premium for it. My counterpoint to that is that you're it's really kind of futile to argue against math, and that's really what you're doing if you're taking the other side of this. I don't like to argue against math, but I would also point out that Nvidia has margins of over 75%, and that's using generally accepted accounting principles. Its profit margin was 55%. I mean, that means that they're just generating a lot of profit on what they do, and that doesn't show any signs of slowing down. Earnings are what drive stock price growth. And so you have a reason to believe that even though the stock's expensive, it's going to continue to go up because earnings are going to continue to go up. And unless that changes, it doesn't really matter what the math says. It just seems like the stock's going to go up.
So I'm sounding like you are with the bulls on this one. Is that right?
I really am, with the one caveat being the broader economy, but there's so many question marks around that right now. I think investors can safely dollar cost average into Nvidia, which means just putting a regular amount aside and putting it into Nvidia at different intervals. You don't have to worry necessarily about what the price is of the stock on any given day. If it does drop a little bit, woohoo, you're getting stock on sale. And if it goes up a little bit, okay, then you've bought the stock at where it is now, and that might be the new floor. So you're okay. But to simply sit there and say you should ignore Nvidia, I just don't think the other arguments really hold that much weight for me.
Well, thank you for the rundown, Chris, going over the bulls versus the bears in NVIDIA. You can find the full article that Chris wrote linked with this video and in our description. Thanks for joining us here on MarketBeat Media. Be sure to subscribe and stay tuned for more market news. As always, happy investing.